Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 155, Inflation and You. Thank you so much for joining me back on the show. I hope all of you out there are staying safe and healthy during this horrible pandemic. For today's topic, I wanted to discuss a common question that has been popping up in more and more of my client reviews. And that's it. And that question is, Jake, what about inflation? As of the recording of this episode of Upticks, inflation has crept up, maybe not crept up, to 5%, which is a lot higher than we've experienced in many years. In fact, we really haven't had an inflation problem since the 1970s. And I actually wasn't even born in the 70s, so I can't talk from real world experience. I was born in 1981. However, I have researched the topic, and actually I recently listened to a really good podcast on NPR's Planet Money about inflation. So I do recommend you go ahead and check that out because it was really interesting that they went over the history of it and exactly what happened to get us out of inflation. But I wanted to share some of the highlights from the episode. And so inflation for the decade, believe it or not, of the 70s, really only averaged a little over 6%. It did, however, creep up as high as almost 20%. So if you were around in the 70s, you probably remember it, and it probably was a very real thing. In fact, for a time there, inflation was going up. Things were going up at 10% a year. So imagine looking to buy a house for $200,000, and that exact same house the next year would be worth $220,000, right? And so forth. And so what was happening is it was several things happening, but what the big takeaway from the show on Planet Money is that I guess it would be consumer behavior really drove inflation. And so the idea was, if you were worried that the price of a house or goods and services or whatever you were looking to buy, whatever you were looking to buy, people were going out there and rushing out there and buying it because they were already assuming, and this is a bad part of it, they were already assuming that that things were going to cost more forever, right? At a hyper rate, right? And we know we have inflation. Things do go up over time, but people said, well, if I don't buy this house now, I'm going to have to pay 10% more for it next year, or this car, or whatever, right? Whatever you were going to do. So it really had a lot to do with behavior and psychology that made it even worse. And so what the Fed did is they tried initially to gradually hedge it off, which didn't work because the psychology was already ingrained in people's minds. And so they took a drastic step, right? And they really, really decrease the money supply, right? And really basically slam the brakes on the thing, which wasn't popular at all, right? People were furious with it. However, it did work in the end. It was able to solve the inflation problem. And then, we rolled into the 80s and 90s and the rest is history. So ultimately what the Fed did work, they squeezed what's called M2, which is the money supply. So they stopped flooding the market with money. So it made it harder, right? So they tightened things, which ultimately I believe caused a recession, which is nobody likes. What that allowed though is for the inflation to stop. People stopped buying goods, unemployment probably went up. So again, it wasn't good, the aftermath of it. However, if inflation would have gotten out of control, it could have been far worse. So something needed to be done. It just wasn't the popular choice and looking back, sure, maybe they could have done something different, but they tried the easy way first, just slowly doing it, and that didn't work. So they felt that they needed to do something drastically. Really good show. I do encourage you to listen to it. Now, so how does that pertain to say, okay, Jake, that's great. That's the 70s. I don't care. What about today, right? It's 2021. What is inflation going to do to me personally if it gets out of hand? And what is inflation going to do to my portfolio, right? And there's several things that I want to talk about here on that subject. So first, the good news with investing, at least the way that we do it at Falcon Wealth Advisors, is that anything that you need in the long term, and by long term, I mean more than 5 or 10 years, we put in stocks. And stocks by their nature are inflationary, and they're designed to protect you against a risk that's called purchasing power risk. And purchasing power risk is simply the risk that your dollars today won't be able to buy the same goods and services 10 years from now, right? And the best way, in my opinion, again, compliance likes to, make sure this is my opinion, the best way to protect yourself against purchasing power risk, inflation, is to have an adequate amount of stocks in your portfolio. With the idea, if inflation ratchets up, right, people are buying more things and that psychology gets there. Well, you know what? Companies that make those goods and services and those products, their earnings are going to go up. And so ideally, the thought is the price of their stocks will go up. So yes, you'll be paying more for it at the register, but you'll also be making more of it in your investments. And that's why it's so important to have a well-diversified portfolio comprised of stocks and bonds, right? Not just bonds and not just stocks, right? So we like to have a balance of both. All right, so that's how we protect it from a purchasing power risk. So my clients that have that in their portfolio, we talk about it during our reviews. I also can run some scenarios if you're interested and looking at, well, Jake, what if inflation is 5, 6, 7, 10%? What does that do to my financial plan? We can run those scenarios and show you. But you have to take that with a grain of salt, because really to do that, you'd also want to probably adjust your target rate of return, because that may be up too. So I don't want to get too caught up in the what ifs of inflation. Remember, again, even though things were crazy in the 70s, for the decade, it only averaged around 6%, right? So even though there was maybe a year or 2 or 3 years or whatever, there was a period where it was very high, it wasn't even that high for a decade. And in fact, we haven't had inflation for decades anyways. It's been very low. So to see it now would be expected. So that's how we protect you on a personal level. Now, getting a little bit deeper in the portfolio, I subscribe to a third-party company called Bloomberg, which in my opinion is the premier research agency out there. And we can actually plug our portfolio in there to see how it would perform under hyperinflation. So there's some things that we may be shifting that you may see happening. If we think inflation is here to stay, we may be swapping out of certain stocks in order to set up our portfolio to profit the most from an inflationary environment. So again, that's what our role is as the portfolio managers for our clients at Falcon Wealth Advisors. We take that role very seriously. So if we need to start shifting around, me and my research and trading group will have a meeting about it. We'll talk about it and we'll take action, right? And we'll do it to help protect your portfolio with that purchasing power risk and make sure that we are set up to profit from a different environment maybe than we've had the last few decades. And that's important. Again, that's why we don't believe in passive investing. That's why we don't like mutual funds or products, because they might not have the same, investment policy statement that we have for our clients. And for our clients, it's ultimately about hitting their target rate of return and making sure their financial plan is in good order. That's it. It's really that simple. And so that's what we may be looking at as far as shifting in the portfolio if we feel inflation is something that we definitely want to take advantage of. And for my third point today is that commodities typically help in that situation. And we certainly have a commodity allocation already present in the portfolio. And so when you look at things like gold or oil, right, silver, right, those things typically do well in inflationary environments. Not always, but again, they typically do well. So again, we've got an allocation to some of those commodities. And again, that's the idea that should help us during some sort of hyperinflationary environment. Now, the good news is this thing is just not running wild on its own. The Fed is mandated with controlling this. That's why they exist. They want to control unemployment numbers. They want to look at inflation, interest rates. These are all things that they're juggling. And that's why it's so important that we pay attention to what the Fed is doing. And there's this old adage out there that says, don't fight the Fed, right? So you don't want to go against what the Fed is doing because they are controlling that monetary supply. And so we want to make sure that we have our portfolio aligned with their theme and that we are taking advantage or getting the most benefit from what the Fed is doing on in any environment. Okay. So again, I got a little bit technical today, but the point is we've seen inflation before. The 70s were rough, right? If we have hyperinflation again, we will get through it just like the 70s got through it. And then we had the 80s and 90s and so forth. Our portfolio, we won't hesitate to make some shifting. If we need to do that, we certainly will for our clients. And we enjoy the privilege of having a discretionary arrangement with our clients. So we won't hesitate to make those shifts. And we already have a couple of things in there, more than likely as protectors, just in case something heats up before we're able to take action. So all very important things. But again, the biggest takeaway from a consumer standpoint is you don't want to have too much money in bonds and you don't want to have too much money in stocks. That's why having a financial plan and marrying those two asset classes together is so important. And I can't stress that enough, that it's very important to have a financial plan. It's very important to review it regularly, at least once or twice a year, to have somebody take a look at it and to check in regularly with your advisor. Again, so that's all the time that I do have for you today. Thank you so much for tuning in. If we're not already connected on the social media platforms, I'm on Facebook, Instagram, Twitter, and LinkedIn. Please send me a friend request. I love expanding my network. My team, Falcon Wealth Advisors, is on the same 4 platforms. As far as fun things, right now I'm in the heat of the Olympics. My wife's really into it, so it's been a lot of fun at the Falcon household, watching the Olympics with Rachel and our favorite pooch, Einstein. Things are going great as far as that's been pretty cool. There's what I really like, and maybe it's been a while, obviously, since the Olympics, but I love hearing the backstories about some of these athletes and some of the adversity that they've overcome. I think, a quick side note, I think that is very important in life. I don't think life is about what happens to you. I believe life is about how you respond to what happens to you and how you overcome that adversity, right? And so all of us out there have faced adversity in our lives. But again, I think even, I don't have kids yet, but even if I were to have kids, hopefully someday, I'm excited to challenge them to overcome adversity on their own, because I think that gives you character and makes you a better human and allows you to reach a level of consciousness that sadly many people walking around on this planet haven't experienced. So adversity is a good thing. And then again, right in front of us on the TV, you've got somebody winning the gold medal and they had XYZ, ABC happen to them and they overcame it, and look at them. And that's awesome. And that is inspiring to watch. And again, the sports aside, it's inspiring to watch how much some of these athletes have overcome, their discipline, their tenacity, their integrity, their knowledge. All of those things are really cool to watch, and it's been a lot of fun. So with that, again, I'll leave you again with this last episode. Thank you so much for tuning in, and I hope you have a great week.